In this video, we'll be going over IRS Form 1099-K, payment card and third-party network transactions. This is a relatively new tax form that came out as a result of the American Rescue Plan Act. And the intention of this tax form is to recognize that a lot of payments are now being facilitated through online apps and digital banking solutions, things like PayPal or Venmo, items where they're not necessarily reportable because the payment processor isn't formally recognized as a financial institution, the way your bank may be when they issue a Form 1099 INT, or if your 401k administrator issues a Form 1099-R to report withdrawing money from your 401k. So this tax form is fairly straightforward to understand, but it's a little bit more difficult to understand how you would take this information and then report it into your tax return. Now, we're a couple years removed from the passage of this law, and at the time of this recording, January 31st of 2024, the IRS has placed what's kind of known as a transition period on this. So in the long run, Form 1099-K will be a required issue for either processors, electronic payment facilitators, third-party networks that process more than $600 of gross proceeds in one calendar year for the same taxpayer. So in 2023, the tax year for this tax filing season, that limit temporarily is placed at $20,000 and 200 transactions in the tax year. So most people that are gig economy workers or people that are selling things on platforms like Etsy, they might not receive a Form 1099-K the way they normally would once this form is rolled out in a more permanent status. So we're in the middle of a transition period. So for tax year 2023, the reporting threshold is a little bit higher, $20,000 and 200 transactions. The IRS has already put out guidance for tax year 2024 that they do intend to limit or lower that phase-in period to amounts above $5,000. So to summarize, for tax year 2023, you should not expect to receive a 1099-K if you conducted less than $20,000 worth of transactions through that processor. So if you're working for Venmo, or if you're accepting money through Venmo, then Venmo should not be sending you a 1099-K unless you recorded more than $200,000 worth of transactions and 200 separate transactions. For 2024, the IRS has not put out guidance on how many transactions is the limit, but the dollar amount would be $5,000. And then the assumption is that once this form is in its final state and the IRS and the Treasury Department have received enough input to iron out any kinks, then the status quo would be $600 per year per person, regardless of how many transactions. So this is kind of an opportunity for people to think very critically about how they're going to be receiving income if they're independent contractors and things of that nature. It's an opportunity to get your housekeeping and your records keeping in order. But for the purpose of this video, we're simply going to walk through a basic understanding of this tax form and what you might consider doing with the information that is in it. The IRS is continuously putting out guidance on what to do if you get an incorrect form, if it wasn't made out to the right person, and we'll put together specific videos to address those situations. We do cover a little bit more of that detail in our article. You can check it out. We'll put the link in the show notes. You can go to our website, teachmepersonalfinance.com, type in IRS Form 1099-K or any other tax form that you can think of, and odds are pretty likely that we've written an article that covers that tax form. So let's go ahead and start with the left-hand side and what you would expect to see here. So this kind of looks like what you would expect to see in a normal 1099-K or 1099. You'll have the filer's information up in the top left corner. This may or may not be familiar to you because the filer can be either a payment settlement entity or an electronic payment facilitator. So, for example, the payment settlement entity would be a bank or some other organization that has a contractual obligation to pay you to settle payment card transactions. So, if Citigroup runs a Visa program and they're the reporter for all of those transactions, you may see payments from Visa or you may see it from Citibank. It doesn't really matter where it's from so long as you have the information that you need to be able to understand where these transactions are being reported. And the reason why that's important is because you may receive multiple Form 1099-Ks based on different ways that your credit card terminal, for example, processed a transaction. So you need to be able to reconcile those payments, how they're reported to you within your business so that you can understand whether or not those payments are being correctly reported. So this may or may not be a familiar name. However, they will indicate whether they are the payment settlement entity. They could be a third-party settlement organization, which is kind of a centralized back office that is required to do all of this. The electronic payment facilitator, this may be a third party that is checked. And if this box is checked, then you should have the payment settlement entity's information here. So this would be, I don't know, let's just say that they're doing all of this on behalf of Venmo. And then you would have their 800 number here. And between these points of contact, the IRS expects that you would have the information that you would need to get a resolution in the case that you receive a 1099-K that you don't agree with or that you think has incorrect information on it. And then over here, this will be checked. One of these boxes will be checked depending on whether this was a payment card, such as a gift card or a debit card or a credit card, or whether it was a third-party network like a Venmo type situation. So you should know that. And then if they're actually processing, if it's the same payment processor that's doing both types of transactions, then you should expect to receive two different forms of this 1099-K. The first one would have all of your payment card transactions. The second one would have all of your third-party network transactions. Underneath that is the payee's name, and this is one of the areas that the IRS will ask you to look out for. For example, if you're John Doe, in this case, this may be correct information. If John Doe is a sole proprietor, he could take this information, report it on Schedule C, and everything's fine. But what if John Doe is running his business as a S corporation and he has a different taxpayer ID number? Then there's going to be an issue where he may need to go back, ask Acme or Venmo to issue a corrected Form 1099-K, which would then come in and be checked at the top as a corrected form with the same payment amounts. This may happen. This may not happen. The IRS overarching guidance indicates that you should not let incorrect information hold you up when filing your tax return. The more important part is that you have records showing that, if this is incorrect, that you have records that show the way it should be reported and that you report it the way it should have been reported on your tax return. For example, if John Doe is an S corporation, then he would still go ahead and report this as income through his S corporation tax return, and then he would make certain notes on that return that reflect the income and the appropriate expenses that he's able to deduct based on that, so on and so forth, as opposed to just completely disregarding all of this income and then letting the IRS come after him to try and assess interest and penalties. So the IRS has kind of put out guidance recognizing that a lot of these forms will be incorrect, and the emphasis is on making sure that you at least report the income the way you think it should be reported, as opposed to just skipping this entire transaction on your tax return. So below this, you would see a field for account number. This is an optional form unless they're issuing you two different Form 1099-Ks for two separate accounts, in which case they would have to issue you a separate Form 1099-K, and each account would be listed appropriately. So starting in the middle up here, you've got the taxpayer ID number. This should be completed in full. You should know exactly who it is, and it's going to be the filer's ID right here. Your ID number should be truncated, although in the IRS version of this form, it won't be truncated. It'll be reported in full. So, and then in 1A is what is reported is the gross amount of your payment card or third-party network transactions. This is just the gross total amount of money that either ran through your credit card terminal or got, uploaded, paid through your website through Stripe or whatever your transaction processor was. So this does not reflect any credits. It doesn't reflect any cash equivalents, like if you gave cash back. It doesn't include any discount amounts, any fees, any refunds, any other amounts. It simply reports cash into your bank account. So it is incumbent on you as the taxpayer to recognize that maybe $120,000 was my gross sales, but my records show that, customers returned $10,000. The cost of my sales was $40,000, and I had another, $10,000 worth of credit. So really, I'm reporting $60,000 of net income off of that. So, the credit card processor or the third-party network, they're only responsible for reporting sales coming into you as the taxpayer. So this could be zero tax. He could be running at a net operating loss. He could be paying taxes on $120,000 worth of income. It is virtually impossible to know what your tax liability is solely from your Form 1099-K. So in box 1B, this indicates card not present transactions. So you won't see this if there's a check in the third-party network box or if there are third-party network transactions. So this is for payment cards where the payment card was not actually present at the time of the transaction, like they had to enter a number, for example, as opposed to swiping the card or tapping the card. So this would be the total gross amount of all the reportable payment transactions where that occurred. So in this case, because we're reporting through a third-party network, there's none. In box 2, there's a merchant category code that may apply based on the industry classification system. So in this case, John Doe, the 5993, I looked it up right before this video. This is the MCC code for cigar stores and cigar stands. So, you could make the assumption that he sold $120,000 worth of cigars in the tax year. In box 3, this is going to be the number of payment transactions. This does not include refunds. It's simply the number of payment transactions that were processed either through the payment card or the third-party network in the tax year. This should be information that can help you drill down into your records to make sure that everything matches evenly. In box 4, this contains federal income tax withheld. You may be subject to backup withholding if you do not complete IRS Form W-9, which is the request for taxpayer identification number and certification. If you do provide that information, and it is a matter of tax law that these reporting entities must ask for this. And if you don't provide your Social Security number, your tax ID number, then they must withhold certain amounts of tax under backup withholding rules. So this is a requirement. You can either give them your taxpayer ID number and then they can just let all the money go through, or they are required by law to withhold a certain percentage if you don't have your information in their records. Box 5 in general, so box 5A through 5L, simply break down the gross amount of the total reportable payment transactions for each month. So to keep things simple, we just listed that John Doe sold $10,000 worth of cigars every month throughout the year. Obviously, this is not going to be the exact way that your records will be reflected. But again, this should help you at least understand whether or not this is in the ballpark of accuracy. So you should be able to kind of match up all of your Form 1099-Ks with your internal financial records, or your bookkeeper should, or your accountant should, and everything should equal each other. At the bottom, state identification number and the state income tax withheld. These are all information fields for taxpayers who may live in a state that requires an income tax. Obviously, Texas is not a state with an income tax. We put this in here for illustrative purposes. So this should reflect the state information if you have a state identification number that was assigned by the state, and then any state income tax withheld. So that's a basic understanding of this tax form. It doesn't really tell you, and the form instructions don't really tell you what you should do with this information, but in general guidance, you should do a couple of things. You should check the form for accuracy, and the IRS website specifically focuses on your name and your taxpayer ID number to make sure that that information is correct. If that is correct, then you can probably go into your bookkeeping and reconcile this, or at least determine whether or not these reports are accurate, or drill down to figure out like how to reconcile your $10,000 of revenue versus the cost of goods sold and all the bills that you had to pay, or any refunds and transactions that came out. So you should be able to do that with this information, but at the very least, you should make sure that you're comparing this based on your records, your name information, as well as your ID number. And then your records, I can't emphasize this enough. This is going to be, very crucial that you do check your records and make sure that you reconcile that. And then you'll use your Form 1099-K to report your income. And keep in mind, your income being reported may differ based on your situation. For example, if you're selling personal items, like if this was a big chunk of change, like you sold a car and you know you took a loss on it, then you can't deduct it from your personal income tax. But let's just say that you bought a car for $10,000 and you sold it for $5,000 because you were in a crunch. The IRS gives you a couple of options. So the first option is you can report it on Schedule 1 under other income, and then you would make an adjustment. So line 8Z reports other income, and you would report the $5,000 other income. And then in line 24Z, you would report an adjustment that said, $10,000, or you would actually mark that and say 1099 Form 1099K sold at a loss is the direct verbiage on the form instructions. So you basically are zeroing out your Schedule 1 by placing it $5,000 in the other income item, and then $5,000 under line 24Z, which is other adjustments, and then it zeroes out. The other way that you can do it is to report it as a sale on IRS Form 8949, which is a sales and other dispositions of capital assets that carries over to your Schedule D. There's not a whole lot of guidance on the IRS website for that, but my reading is if you're selling something and reporting it on IRS Form 8949 and you're receiving a loss, then that loss may be used to offset other income from similar asset sales. So that might be something that you discuss with your accountant. And again, if you bought a car and you held it for a year plus and then you sold it at a loss, you may be able to offset gains of capital gains elsewhere. And then if you're in a business where you're selling goods, you're renting property, or you're providing services, then that depends on the nature of your business. So if you're a gig worker, if you're a freelancer, if you're self-employed, if you're a hobby seller, whatever it is, generally, unless you have a specific tax entity, such as a corporation or a partnership, then the IRS would consider you to be a sole proprietor, and you would report your income on Schedule C. If you're in a partnership, you may report your payments on Schedule E and then deduct the cost of the goods through that. If you're using this and or if you receive this because you received rental income, then you may report it on either Schedule E or Schedule C, and that really depends on whether or not this is a side business for you or if this is your primary business, like your primary source of income. So if you just own a rental property but you really work at a day job and you get a Form 1099K related to your rental property, like an Airbnb, for example, this probably would be Schedule C. If you own and manage 10 different Airbnbs and that's your full-time job, then you're probably reporting this on Schedule C. So we will go over specific examples on things that you should do. For example, if you receive a Form 1099K but you shouldn't have, if the gross amount should be shared with other taxpayers, if you have other specific questions about like an improperly filed 1099K, we'll cover those in different videos. So you can get a little bit more information on those types of transactions by reading our article. You can also, we'll put links in the show notes to the other 2 articles and videos that we've created for some of these other tax forms that I mentioned, Schedule E, Schedule D, things of that nature. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's something you'd like me to cover in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.